Hey, it's Siobhan Hamilton again here to talk to you about adding value to a property versus getting a buy to let. Let's start again. Adding value to a property versus getting a below market value deal. And I wanted to speak to you about this because I had an interesting conversation yesterday, which kind of brought a lot of thoughts to the forefront. I thought, wow, I've got to share this with people. And the conversation that I was having with someone is that they couldn't get any properties that were below market value. And in fact, they thought that below market value properties just didn't exist. And without being unprofessional or laughing at the person, which I really wanted to do, I just can't accept people who say that they can't get properties below market value. There's two things really. One, why does it have to be below market value? And two, you certainly can get properties below market value. So I'm going to deal with the first one first. The reason why I started off by saying get a property that's below market value versus adding value to a property is because your property does not have to be below market value. If you know that it's got the potential to be worth X amount of money, remember you need to know what that X is. But if, for example, you've got a house on a road where predominantly the houses are two bedrooms, but you can see that a property has been sold for, I don't know, 20% more because they've added a room, that's an indication to you that you could potentially do that in this property. Now, when you're comparing, yes, they need to be sort of the same kind of house in terms of they've got to, if they're terraced, they've both got to be terraced. If they're semi-detached or end terrace, they've got to be either semi-detached or end terrace when you're comparing to make sure that your research is sound. But just looking at little things like that and how other people have added value to their properties, it may not have been their intention. It could have been that, their family grew and they had a room that was big enough to do that, for example. So it might not have been by design, but they've done that, and that's the results that they've got as a consequence of doing that. You can do that in your property as well. Now, there are loads of other ways that you can add value to a property. It goes way past just cosmetic. So don't go into a house thinking that you're just going to give it a lick of paint, some new carpet, and you're going to get a high valuation. It's not going to happen. You need to think about whether you're going to do an extension, whether you're going to go into the loft, whether you're going to add a conservatory, whether there's going to be an additional living room, additional bedroom. You have to physically make changes to the house to change the value of the property. Okay, not even just a simple new kitchen and new bathroom. As simple as that is going to add a significant amount of value to a property. Again, that's cosmetic. But once you're changing the footprint of a house, once you are making the house bigger, then that is what's going to add the value. So going back to what I was saying, if you can find a house that you can add value to it, then you don't necessarily need it to be below market value. However, if you can get a below market value property that you can add value to, then whoo, that's the sweet spot right there. But that's not a must, okay? Everything comes down to numbers. And as long as you've done your due diligence and you know what that property is going to be worth once you've done that refurb, then that's okay. You don't have to be stuck on these you don't have to be stuck on these below market value concept. Now, the idea with below market value is that if you buy that property, you have made your money when you've bought that property. So, in other words, the price that you've bought that property for, you will make a profit if you were to put that property back on the market and to sell it at the market rate. For example, if you know that a property is worth 150k, and you negotiate that price and you manage to buy it for 130, for example, which I think, if I've done my calculations right, that is 20% below market value. If you were to put that same property you have bought for 120,000 back onto the market, you should be able to get 150,000. You should be able to sell it for 150,000. That's the concept of having a property that's below market value. And also, you should be able to sell it for 150,000 without doing any refurb, without doing anything to it. That's what below market value means, and that's what making your money when we buy means as well. Okay, so those are the two things. And like I said, I just wanted to put that out there. I don't want people to have, there's so many I don't know, concepts about property or ideas and thoughts that people have about property investing which are just not true. Property is a numbers game. And once you know your numbers and you've identified your risks, you've managed those risks, you've looked at your best case scenario, worst case scenario, most likely case scenario, then property investing is, it's very, very profitable. But you just need to know those numbers. Don't get caught up on below market value properties, and just look for the gems that you can add value to. And on that note, I'll leave you in peace, and I will speak to you again on the next one. If you liked what you heard, hit the like button, press the subscribe button as well, and the notification bell so you know when I'm uploading. Take it easy, guys.